All right, cool. Let's just jump straight into it. It's almost 10:30, so it's a sort of funny time of year. Sort of like we've just had the daylight savings and that sort of kick in. So you got sort of like Asia opening, like ASX, obviously sort of starting up around the sort of obviously 10 a.m. sort of time in that, but you're not seeing DXY come online till 11. So generally sort of like it's pushed back a little bit and you get a little bit of that volume coming in, sort of I guess it would be kind of pre-market-ish kind of thing, but yeah, it's certainly a little bit of a sort of odd time till I think the rest of the world sort of has their daylight savings as well. But regardless, just firstly looking at Aussie. So this is what I mean. This is really sort of kicked off these lows here, and we saw yesterday that if we sort of flip down onto a lower time frame, this was that gap came up here. Depending on what time frame you're sort of trading, like if you look at the sort of gap here, um, you could sort of say that this was I guess your close here would have been slightly positive, but it didn't quite get up there to sort of close that gap. Like it got within a couple of pips and that. Like I actually had an early position here, came up here. I missed this. I missed taking profit by like I think 4 points or something, which is frustrating as hell because obviously then it just gave back all its gains. But nevertheless, and that sort of we got it off and sort of closed out a portion of it just up over 64. So it's certainly looking like the textbook reaction with wars and all these kind of things is obviously for people to go sort of risk off. What I've been trying to play the side of is that we've had 13 weeks straight of DXY sort of USD sort of gains. Excuse me. I think the flight to sort of safe havens, the risk reward isn't the same there for the US dollar at the moment as we saw prior to all this sort of Middle East stuff. So coming into the end of last week, actually all through last week, I was mentioning every time you had some news drop, USD can't seem to do anything wrong with their figures and their data that's coming out at the moment. But every single time that news dropped, the market used it as an occasion to sort of sell into it. So, NFP was just exactly the same again. And you saw it drop down, bang, reverted up. So the market is still sort of saying, look, you know what, we want to sort of cool off. We want to take some profit on USD, DXY, these kind of things. And you're seeing the sort of the crosses and that sort of reflectors as well. And this is probably why we've seen that big jump in gold as well. Apart from the fact that gold was, from a technical standpoint, closed very well to last week, the Middle East thing just sort of came at the right time for it. I think if this continues, I'm looking into 1900 plus. If we happen to get some sort of sniff of some sort of banking crisis, that's what really sort of shot gold last time. It was the small regional banks, um, sort of the issues with them basically is what sort of got it to that all-time high. I mean, if you have a sort of a perfect sort of confluence of a bunch of fundamental factors that could drive gold, um, that with US dollar sort of selling off, then yeah, we could definitely sort of see a push back towards 2000 plus and even all-time highs, depending on how long this whole sort of conflict and everything sort of goes on. But for here and now, and that I'll flip across to gold in a moment. But yeah, certainly it's kicking along nicely. Aussie is one that I've been sort of trading alongside of, as I mentioned. We get onto the weekly one, and this is what I was saying, sort of like with the close of last week, the fact that it sort of got back up into this range and managed to sort of close in, what I'm calling this a consolidation box. I felt the fact that it couldn't close down here or even outside here for the continuation to sort of drift and dribble down further was a very bullish sign. Not sort of bullish to the fact of, okay, yes, now here's a full reversal, but as I said on the weekend videos and I've been sort of touting is that if it's a failure to continue in one direction, well, there's only one other direction for it to go. It failed to close down here, and even with this gap, it's obviously starting to push back up. And, depending on how this plays out, we've got US CPI later this week on Thursday night. Um, Again, that could sort of play into things. But this is, at the moment, I mean, it's only Tuesday morning, so it's a long way to go. But at the moment, this is setting up to be an engulfing week. With this perfect gap down here, markets use that as a great cheap, myself included, nice cheap entry for it all. And they're buying it up and they're pushing up currently. So 65 still remains as the big sort of like short-term breakout point. Above that, 66. I know it seems sort of 65 handle, 66 handle, these kind of big round numbers. But of course, you know what I mean. If you go on to, I think the daily sort of reflects it a little bit better. 66, really, you can see around here was that strong swing support, and obviously for this big double top. So that was the part that sort of said, okay, under here, we rejected, bang, 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 bang. And you see I've got it marked out here. Above 65, 66, I think will definitely come into play. This is going to be a tough nut to crack. And of course, you know what I mean. We're only just over 64 now, so you know what I mean. It's a lot of stuff to sort of come into it. But as mentioned also on the weekend video, looking at this sort of falling resistance here, which we've seen, it's sort of 1, 2, 3, 4, 5, 6 times. It's been well, I guess 7 times here. Been sort of respected. We've now, for the first time, actually had a daily close above that. So I think these are the little things that need to be sort of taken note of, because it's just that change in price action, that change in pattern. Whoever's been selling and pushing these things, you know what I mean, there's obviously not one force that's selling it, but we can see quite clearly every time it's come into contact with this, these have been like this, like every single one of these, like was a big, strong, bullish candle. This one was a big bullish candle. This was a very solid bullish candle. Every single one of them got absolutely like smashed into. They got crashed down, and you've seen the reaction subsequently. And it's just had a bang the next day, follow through and follow through, same and same and same. So the fact that we have now sort of got a close above here, albeit only a few points up, that's still something. It's a change in pattern. It's a change in the flow of the price action. So I think that needs to be respected. At the moment, it looks like we're sort of testing to sort of take out that wick. It's pretty early, and as I said, DXY is generally sort of 11 a.m. it comes online. So that may sort of see things. So we may see a little bit of a pushback down here. But the size of this and the fact that we closed that gap, closed on the highs, I would expect a little bit of a sort of carry on, even if we are to sort of get up, and then we can sort of say, okay, where might we be looking? Maybe around these these sort of short-term levels would be nice little confirmations to get above, because it was then, if we sort of go into a bit of a horizontal view, we're seeing that at these levels it was unable to close above. Obviously this one as well, even the day after, it tried to sort of rally up again and bang, push down. So, and then the next level up, wick, we got the high closes here. If we can get a close up above 64.60 today, 65 is definitely the magnet. That is where we're going. So that's the time to sort of probably, if you want to sort of, obviously it's only 40-point move up there, but Aussie's not a big move up. So 40-point is a decent move, and if you pile on with a bit of weight, I reckon that's a pretty high risk reward that we're going to see that continuation, at least up to hit this level. I do think that this 65 will go. Like, that is my sort of stance with it all. As to sort of how far and everything, 66 is the next target. But I mean, not to sort of get ahead of ourselves, but that is where I sort of think Aussie might be sort of going in the medium term before a little bit of a retracement and pull back down. Okay, gold's traded beautifully. As you can see, we've updated the this chart with the channel, which is the one that we sort of got off this one. So it's always important to sort of keep an eye on all the trades that you got here. But we're seeing that first price target that was mentioned. If I get down onto the lower time frames, you can see here. Maybe on the 4 hour, I might show it a little bit better. So as we sort of said Friday, that we had this negative divergence, which we can see played out beautifully. Broke through 30 was the confirmation. Obviously, we had this big push up here, which was the mainly, I mean, you can't see it on the 4 hour. Actually, you can't see it on Oanda. That's right. But we had that big push up, the gap up. I said yesterday in the video that, look, if it holds these gains here, and doesn't sort of come back down here, because this is a big, easy money gap up. It's very, there's a high chance that, people just go, okay, cool, I'll take the profit. But this is where we were looking. So you can see here that previously this zone, it's come up here, it's clipped it, and that's first price, first price target hit, bang, taken out. I think potentially if this, yeah, as I said, if this conflict goes on for a little while longer, we could definitely see a bit of a push further back up. And there's no reason why we can't test these higher levels and possibly even the top side of this sort of main sort of downtrend channel. But as I said, this is the way that you want your trends to sort of start. You want the big explosions out because that's the market saying like all together, okay, yeah, let's take this high. You don't want these little dribbles because sometimes the dribbles just really, they just, they could just be short coverings and it could just sort of fade off a little bit. But certainly for now, that first price target mentioned from Friday sort of been taken out. And yeah, sort of see what happens. As I always sort of say, gold doesn't really tend to do too much through Asia. I generally give it a $5 range. You get the outside days, but yeah, it's not a big mover in those ones there. One thing of note to, with gold though is if you look at this is typical gold sort of fashion. You could sort of say that, okay, yes, it's moving up here, bit of a pennant sort of flag sort of thing happening. Gold loves to do these moves, and I've mentioned this a few times. This sort of move, where's it? This little move right here, is that it doesn't make it easy. Like if you put your textbook stops in these areas, okay, here's the low. I'll put my stop just here, just below the lows. That way, if it's going down here, it's obviously changing trend. Gold is renowned for doing this, and it does it time and time again. Comes down here, textbook, boom, takes them out, and then of course, then it moves up. So that's one thing to sort of always be wary of with gold, and that just before, particularly in these consolidation zones, you'll sort of get these areas where it'll sort of just drift along sideways. It won't just break out to the top side. If it is moving up, it'll come down, shit everybody, grab some liquidity, then it'll move up. So that's certainly interesting sort of with gold, but worth noting because it happens time and time again. And I mean, even myself sort of, you can see here, this is the NFP coming along, consolidating down here, stopped out. Even I got stopped out on this. I was not on these charts. I was on a different platform. And, I mean, I just didn't have my levels perfectly marked out, but I got stopped out of a bunch of positions here. And of course, this is a reaction afterwards. So yeah, it's worth taking note of. Okay, across to DXY. So yeah, DXY continues to be sold into, as we can see with these sort of moves here. This is an interesting sort of part here. If you sort of look at this, we've got this sort of like higher sort of falling resistance, which played its part with the NFP drop. This was the push from Friday. This is obviously news driven, and then obviously subsequently within an hour, 2 hours, 3 hours, whatever, boom, it took it all out, came back up, and once again, where we already had our sellers pricing the market, they've also come back in at that level. So this sort of shows that this was just a news driven event. Market's gone, okay, no, great, give me a better chance to sell it, I'll sell it from there. They sell it back down, and then back into your normal routine of lowers, and this sort of level being the sort of the line in the sand in the immediate for them to break across. So we're starting to get into the sort of higher time frame sort of breakdowns. So at the moment, we're still seeing. I mean, look, it's still very, very, very bullish. I mean, sort of coming up all the way over here, but as I've said a couple of times, I do think we've got some more profit-taking downside to sort of come. Certainly a couple of other things with China sort of pushing back down and also copper pushing up. I think these things are other indicators to show that, we could be sort of seeing a little bit of at least a medium-term top. It's coming off this daily negative divergence. It's down into the oversold now. So, you know what I mean? If you invert these things as well, just a quick sort of look here. These sort of like low wick sort of things, I mean, typically they can be sort of, you know what I mean? It's a bit of a reversal kind of thing. So, it's not to sort of say that, it can't sort of have another couple pushes up. Like certainly, you know what I mean? After this big run, it's going to have a lot of people that still want to buy it and still want to push it up. And all their data is still very strong and supportive of growth in sort of in America. So, yeah, it's just one to sort of watch. At the moment, we're still seeing a little bit of a continued sort of push down. It is oversold now, but that negative divergence played beautifully, as we can see, and it's sort of pulled back off. Sort of looking at, I mean, not massive, but it's over 1% sort of off the highs at the moment. Still, certainly, I mean, if you look at that in comparison to how hard it's run, yeah, it's still obviously sort of very bullish in the main sort of trend, but certainly it's cooling off. But we could sort of see a little bit of a push up, sort of like, turn around Tuesday kind of sort of thing before what I think is going to be a bit more of a push down into the 10 into the 104s. I think 105 will be sort of a short-term target, particularly if we can sort of give up this 106 area. China and that is still slowly grinding. As I said, I'm sort of looking for sort of bit more of a push down, sort of continuation here, confirmation I'm calling underneath this neckline. I've got the price targets marked out, but again, nothing sort of a major of note with sort of China. So it's underneath this sort of rising trend. You've got the right shoulder sort of coming into play at the moment. But underneath this sort of whatever you want to call it, 106, sorry, 726.50-ish kind of area. I think that's going to be a nice sort of confirmation. We're going to see quite a quick move once we've sort of got under here, because you've got anybody that's trading this short-term trend, anybody that's waiting to get long on this sort of main trend, and anybody that's trading the sort of sort of head and shoulders also coming down. This was another one with a negative divergence as well, I do believe. Sort of, yes. So if we look at it on the weekly, this is sort of how it's sort of playing out. And as you can see, these last couple of pushes up here, you're just not seeing the buying pressure and power sort of coming in to respect it. So that's a good sort of indicator of it, that we're going to see a little bit more of a rolling over. As I said, if you get that close down here where we've got the alert set up, you're getting that with all those mentions, all those sort of indicators and that are sort of said just a moment ago. But you're also seeing this breakdown on a weekly. And, then if you're looking at the weeklies, as I said, these are kind of our price targets down here. But this certainly this 107 sort of 15 area, I think, is definitely something that will get a touch up quite quickly once we get underneath this neckline. And finally, just have a quick look at copper. So what it's doing, as you can see, it's sort of like, it was very unfazed by that gap yesterday. So it's interesting to sort of see how these things are playing out, because I think sort of textbook sort of war scenarios and all these kind of things obviously scares everybody and scares the market, and everybody thinks it's going to close down. So obviously maybe this is a regional thing. Maybe everybody's a bit sort of like over the whole idea of just taking profit and selling off things after everything from the Ukraine war. Not 100% sure, but it's certainly interesting to sort of see, because, I mean, Aussie shouldn't be appreciating necessarily in this environment. It's a risk asset. And, war is uncertainty. So obviously people like to take risk off the table. But we're certainly seeing that sort of push up. Will continue to push up. So even as we're sort of talking, it's 64.20 now. So pushing up on the day, and it's taken out that previous daily wick. But copper is certainly sort of playing ball. So as we said the other day, these are where the buys were going to come in. This was Friday when it was just down on this zone here, and it exploded up. Gap down, took it out close on the high. It even sort of had a bit of a gap down this morning, I think. So as you can see here, look, this is where the open was here, and it sort of started. It's obviously a bit of a gap down there. They spent, 2 seconds thinking about it before they just went bang and pushed it back up again. So again, take out the previous highs, and we're going to see that move back up. So, these highs over here, the sort of 376 area, is probably a reasonable target of where we might be sort of going in the short term. 380 is the confirmation for a fake out for the larger move on the daily, weekly kind of sort of time frame. But certainly at the moment, they're deciding that this level for it is certainly cheap enough and it's worth buying up. So we'll sort of see it move forward a little bit more. All right, cool. That's pretty much it from me.